Welcome to this short explanation of how the JobKeeper payments are taxed for employees. That's this little guy. If that's you, you would have filled out an employee nomination notice, something like this, and handed it back to your employer. The JobKeeper wage subsidy is administered by the Australian Taxation Office, who essentially will pay $1,500 per fortnight to your employer to help pay for your wage. There are various eligibility requirements, and if you'd like to know more, I will leave a link in the description. For the majority of employees, there's going to be two scenarios, but they both essentially lead to the same outcome. In the first scenario, you ordinarily get paid more than $1,500 per fortnight. In this case, your employer will keep paying you your normal wage and is simply incentivized to keep you employed. Your employer will then submit your payment summary to the ATO via the usual channels, and that data will be available to you on myGov for you or your tax agent to complete your return. In scenario 2, you earn less than $1,500 per fortnight. For example, let's say you earn $1,000. Well, there's a JobKeeper requirement that states that your employer is required to top up your wage to that minimum amount. So in this case, your employer will need to pay you an extra $500 so that in total you receive $1,500. Now, unfortunately, you will need to pay tax on the whole $1,500, but don't worry. Your employer is still required to withhold tax from your whole pay, which includes any top-up amounts. And as in scenario 1, we'll declare these amounts to the ATO, and you or your tax agent can log into myGov to find the details and process your tax return. Note that after the end of September 2020, the JobKeeper subsidy will slowly be phased out, so these minimum amounts will come down. If you have any further questions, you should contact your tax agent.